One of the keys about the dividends that the gold miners are paying is that these dividends are likely to go up, because as the price of gold goes up, all else being equal, that incremental price just drops right to the bottom line. And it gives you a big increase in earnings, which allows you to increase your dividends. You know, gold mining companies are really among the only companies right now where earnings are growing and dividends are going to go up. Most other companies are struggling to maintain the dividends they have. Their earnings are down. They're cutting dividends everywhere. And so if you own gold stocks, not only do you get the hedge against inflation that you get from gold, but you actually get real current income that you can spend, because gold itself is not a productive asset. It's just a metal that sits in a safe. But if you're running a gold mine, you're operating a business. Not only do you own gold in the ground, but you're mining it and selling it for a profit. And so when you own stock, you get your share of that profit paid out to you in a dividend. And as the price of gold goes up, your dividend goes up. That's a great income stream that's hedged to inflation, because when your cost of living is going up because of inflation, so is the price of gold. And now your dividend income goes up, so you have more income to pay the higher prices for goods and services.
So what is your prediction on capital gains tax?
Even if you look at what Biden has proposed, assuming Biden is the winner, he is proposing not only taxing capital gains as ordinary income, but he wants to subject all income, including capital gains, to the Social Security payroll tax, which it is exempt from now. So you're talking about a capital gains tax rate, I think it's around 57% is really what they're proposing. And then if you live in states like California and New York, and you add that on top of it, you're talking about well above 60, 65%. But who knows, the capital gains rates could be even higher than that. We have massive amounts of debt in this country. We're racking up more debt every day. And how are we going to pay for it? Obviously, one way is through inflation, right? By printing money. Another way is by raising taxes. And we're going to get both. In fact, the Democrats are promising much higher taxes on the rich. And I have a feeling that they're going to deliver on that promise. I think the taxes will be even higher because, as you tax the rich, you get fewer rich people. Their wealth kind of disappears. And so then you have to raise taxes even higher on the ones that remain. But the bulk of the tax is going to be the inflation tax, right? Where the government just prints money and spends it instead of taxing and spending. And that's where the gold stocks give you the best hedge. You can hedge the inflation tax by getting out of the dollar. It's very hard to hedge the income tax. I mean, unless you can move to Puerto Rico or something like that, which is where I am. But other than that, I mean, you're going to get stuck with those taxes, but you won't get stuck with the inflation tax if you get rid of the dollar soon enough and get into gold, silver, and these mining stocks.
So Kim and I have had the unique experience of taking 3 companies public with Frank. And like I said, if you saw what goes into making sausage, you wouldn't eat the sausage. And the best thing about taking companies public through an IPO, an initial public offering, over the Toronto Stock Exchange, we saw what goes into making a stock. And that's why I was totally turned off. I would never touch a stock again. I mean, that included Apple. I remember Apple was $18. I refused to touch it just because it's such a worse game. And Amazon, I refused to touch it. So it was Peter, because I like gold. Peter Schiff was talking about me being closed-minded, so that's what today's program is about. What did we learn from Frank? Frank has taken so many companies public. And like his classic line is, he says, "My difference between my lies and your lies, my lies come true." And people just sat there and just gave him more money.
Yep.
I sat there, and it's this old saying. It says the definition of a gold miner is a hole in the ground with somebody standing next to you. That's all it was. We had nothing. Frank just kept telling the story until we found gold. So it was a lesson in paper assets, but like I said, it took Peter Schiff to kind of open my mind up and say maybe there's another way of looking at gold mining shares or ETFs, which I don't touch at all. Anyway, the thing about gold and silver, it's liquid. Paper shares of gold mining stocks are liquid. That means you can get in and out of them pretty quickly.
And one other point too is,
you can't get out of a gold mine very quickly.
That's true.